In today's video, I'm going to cover the whole entire market in terms of Dow Jones, NASDAQ, and S&P 500, including the economic calendar, plus investor sentiment. And given that it's tax season, Free Tax USA provides free tax software plus free federal filing. And then for state filing, they only charge $15 versus TurboTax. They charge for the software plus $20 for state filing, and then $25 if you file closer to the deadline date. I've used them in the past, same setup in terms of questions, going through taxes. Gave me the same return, and you save money. If you use the link down below, it does support the channel. Thank you so much for that. I do appreciate it. No extra charge to you. It does support the channel overall. Thanks again for the awesome support. Now, in terms of the economic calendar, the most important thing to look out for is March 19th. They have the FOMC interest rate decision at 2 p.m. Plus, shortly after at 2:30 p.m., we have Fed Chair Powell press conference, which I will be live streaming that on my channel, so be on the lookout for that. If you want to be notified when I do live stream it, consider following and subscribing so be notified when I do. And then also another thing is too, the week after, because in these videos I post them every week, and I cover the week, the overall week's calendar. But a little bit jumping the gun in a way is the week after, Friday, March 28th Friday, March 28th, we have PCE inflation numbers, right? And that is important because technically from the Fed, what they've stated in the last 2-3 talks, is specifically Jerome Powell, is essentially they're not going to be cutting interest rates anytime soon. They're more of waiting to see the data points because they're worried about the current administration potentially having an effect on inflation and having inflation increase. In my opinion, I don't think that will be the case. I think the current administration will have inflation coming down. We're seeing the data points as well too. Currently, even though the current administration has recently come in, but they are moving fast. But we have CPI and PPI inflation numbers actually come in lower than expected in terms of what they expected for inflation to be, and lower than previous data points as well. So I'm going to go over that soon, and I'm going to go over the economic calendar and all stuff. But first, I'm going to go over investor sentiment and then the technicals, and then come back to economic calendar. Now, in terms of investor sentiment, we are coming in less bullish overall week over week. Currently for this week, it's at 19.1% bullish versus historical average at 37.5, so quite significantly lower than historical average. And then again, week over week being less bullish. And then bearish sentiment has increased as well from the previous week at 59.2% versus historical average at 31%. So quite significantly higher than historical average versus 31%. And the sentiment, I would say, is rightfully so for the time being. Again, I think this administration will be good for the economy. Right now, it doesn't seem like they're more focused on the market in general. They have other things at hand. But for the time being, with indications pointing to the downside, plus investor sentiment is more bearish overall, I think more downside could be heading our way. Even though hypothetically, some recent indications could be arguably so, where at a level we could be bouncing or flatlining a little bit, waiting for the FOMC decision making, but ultimately heading down unless the Fed states that they will be having interest rate cut and dropping the rate this meeting. Therefore, basically almost showing to the market that they're showing confidence overall in terms of inflation rate will be coming down, as we've been seeing, and continue to come down. So providing confidence to the market. And if that is the case, then technically we reverse to the upside and continue to the upside, potentially reversing all these indications. But I'm going to go over all those data points, and then hopefully you guys like the video. Hopefully you guys enjoy it. If you do, consider dropping a like towards the end. Now, in terms of the S&P 500, I'm going to be looking at ETF SPY, ETF for the S&P 500. Same thing, just different ratio. I've shown all the data points before. I'll just quickly show upward trend resistance line dating back since 2010, upward trend support level dating back since 2010, upward trend support as well dating back since 2010 for 2 major crashes. I only show this because technically one day we might touch this upward trend support level, and you could capitalize on it to hopefully bounce off that support level and then go to the upside, but we'll see. Mid zone, all that stuff coming down, but ultimately the indications are still showing to the downside. Here's the MACD line indicating a bearish or bullish movement. Currently in the bearish movement, you could argue we're heading up, especially with the data points coming in more on the buy side, but we are still on a downward trend resistance line. I'll zoom in and it'll show more of a defined line versus here. And then there is a false breakout as well, but I think we might be seeing another false breakout and still ultimately heading down, because if you look at the 5-year chart, same thing with the MACD line in the bearish movement, but it is more profound to the downside, indicating strong downside still, volume coming in more predominantly and increasing more on the sell side as well. And then quick thing for the NASDAQ and Dow Jones, ultimately showing the same thing, ultimately showing further downside to come. And in my opinion, even though, for example, the 5-year chart is on the 50-day moving average, did break through, you could argue it's a false breakout, and then we're going to bounce off this 50-day moving average to go to the upside. The only thing is, though, I think it would need a catalyst regardless, because these indications are pretty strong to the downside, and the catalyst would be something like, for example, the Fed does cut interest rates, and then also not just cuts interest rates, but more commits to they're seeing an overall pattern of inflation is coming down, and then they're confident that inflation will continue to come down versus cutting rates and stating that they would still need to see how the new data points are coming in, which most likely they will state that, and then they're still worried about the current administration in terms of inflation overall. If that is the case, I don't think that would be a great bounce overall to reverse these downside indications, but hopefully they are, and hopefully that is the case when we do go back up to the upside. But for the time being, indications are coming to the downside. And if we look at the alt chart, it is in the bullish movement, but potentially coming down to the bearish movement as well, crossing over with the volume coming in more on the sell side. You could argue back in October 2023, we did come down and then reverse up to the upside, continuing to with a bullish run. But you could argue at the same time we bounced off this upward trend support level dating back since 2010, coincidentally the perfect time and all this stuff, right? You could see here it's more predominant on the 5-year chart. A couple bounces, all that stuff, etc. False breakout right about here. But we'll see. We have to wait and see. If you look at the 3-month and 6-month, it is showing a potential upside. So here's the downward trend resistance line I showed earlier, the false breakout within the moving averages for the time being. And if you can see right about here, the MACD line is kind of looking like it wants to go to the upside, a continuation of the bullish movement based off the MACD line. And the 6-month also is a bullish movement. So we could go to the upside and potentially reverse everything. I just don't think that will be the case, unfortunately. And you could argue the false breakout could even go up to this 50 or 100-day moving average of the 6-month chart, which is about $573.65. That's rough range, I would say, because again, these moving averages do move day by day. And at the same time, we close at $562.81. Again, that's $573.65 for the 100-day moving average for the 6-month chart. But we'll have to wait and see for the time being. And we do have more resistance on the way up, because even on the 1-year chart, we have the 200-day moving average you have to cross and the 100-day and 50-day moving average crossing over pretty much around the $593 for the 50-day and 100-day moving average. Now for the NASDAQ, if we were to get pulled up, I would say the tech sector could pull us up a little bit, quite significantly, because it's a little bit more stronger of a pull up, but then at the same time, more stronger pull down overall. And I'll explain what I'm talking about. So in terms of the 1-year chart, MACD line is on the bearish movement. You could argue it's going to be crossing over, but the pull down, unfortunately for the 5-year chart, same thing as the S&P, is on the downside with the bearish movement. Volume coming in just like the S&P with more on the sell side. 50-day moving average pretty much underneath it for the most part, but it could be within the zone to bounce. But again, depends on what the Fed states, in my opinion. And then the alt chart, strong to pull to the downside potentially, because MACD line is on the bullish movement, but could be coming down to a bearish movement with the data points predominantly coming on the sell. And especially if we look at the 5-year chart, right about here, just like the S&P, we have an upward trend support level dating back, or upward trend resistance level dating back to 2010. Yes, a false breakout in 2020 to 2022. Couple false breakouts right by here, not necessarily a false breakout, but a breakout and then pulled back down again, and then upward trend support level dating back to 2010. But if you look in and zoom in right about here, here's the upward trend resistance line dating back to 2010, and we're back underneath it again and getting pulled down. And just like the S&P, zoom in right about here, downward trend resistance line, moving averages. You could argue we'll have a false breakout, but we'll get pulled down ultimately, potentially. But the false breakout could be a decent amount, or a decent one, because the bullish movement is to the upside potentially, and then the thing that can knock us down is the 100-day moving average on the 6-month, which is right about $489 or $490 basically. So $490. Again, these moving averages do move, and we're currently sitting at $479.66. Again, these swings on the tech sector are quite significant though. So this pull to the upside could be quite significant to reverse at least the 1-year chart, not reverse it, but essentially commit to the reversal fully and actually end up crossing the bullish movement. And if we end up heading up to the upside, we would have headwinds on the 200-day moving average and 50-day and 100-day moving average, or 100-day and 50-day moving averages. And then hopefully that continuation goes to the upside and reversing to the 5-year chart. But we'll see. Again, we are within the zones of potentially bouncing, even though we broke through them. but it'll be more dependent on what the Fed states and how they move forward, not just cutting rates and basically stating that they're still worried about the current administration and all that stuff, right? Now for the Dow Jones, showing the exact same thing. 1 year chart, bullish movement or bearish movement, downside continuation, but potential bounce, and I'll go over that soon. 5 year chart, bearish movement, strong, just like the S&P and NASDAQ. But again, potential bounce, 50-day moving average on the 5 year chart, but strong downside nonetheless right now for the time being. And then the alt chart, just like the S&P and NASDAQ, potential crossover to a bearish movement. But for now, it's in the bullish movement. Now, if we go to the 3-month chart, you can see right about here, bullish movement, MACD line, 6-month chart, bullish movement. But for the 1 year chart, in terms of levels and zones, so right now we're at 41,488 points. We could be bouncing on this level right about here, upward trend resistance line dating back since 2021. We saw a couple bounces, a little bit of false breakouts. Could be seeing the exact same thing right about here, but more dependent on the Fed, what they state. If we were to continue down, I'd be looking at support potentially around the give or take about 40,000 points. So it's right about here, about 40,200, 40,300 points, but I'm pretty sure we'd have a false breakout. Plus my lines are not perfect. And then right about here, this upward trend support level dating back since 2021 as well. And that level is around roughly about 38,800, 38,900 points. And we'll have to wait and see if we go down further. Again, in my opinion, I think this current administration is good for the economy. The only thing is, though, the focus is not quite on the market yet. And what they are doing technically overall is beneficial. For example, budget cuts and all stuff. That will bear fruit later on. It's just right now it's not foreseen in terms of the markets, all that stuff, et cetera, et cetera. Plus, from the budget cuts, technically, that they will be providing refunds to taxpayers. So that should boost the economy somewhat. And supposedly they're pushing for no income tax up to $150,000 of income, right? In terms of what you're bringing in as an income. And that is quite beneficial because more money into the consumers, and then technically that could provide enough bump ups for these earnings reports that come in for the companies, right? But we'll see. It's a little bit of a balance. Now, in terms of economic calendar, like I stated, I'm going to go over the numbers, but one thing to note is in terms of the inflation data that came in previously, the CPI and PPI inflation numbers for the consumer price index and producer price index, they came in lower than expected. So in terms of, for example, the core CPI, so it has, the core one is without the energy numbers coming in. Previously it was 0.4%. They were expecting 0.3, but they came in with 0.2%. So this is for month over month, and it is lower than expected, right? And that is quite significant. And month over month, the Fed, I would assume, would be looking year over year, but from the past talks, they seem to be more focused on month over month. And if that is the case, I would say this is more of a representation of the current administration, right? Because the current administration month over month, obviously you can't expect 100% reflection of what they're doing right now to be reflecting this number 100%, but I would argue that there is at least a little bit of effect within the month as we go, especially how fast this administration is moving. So we see inflation coming in, combating against what the Fed is stating that they're worried about this administration increasing inflation from their efforts or whatever they might be doing, or worried about this administration increasing inflation as a byproduct, right? And if we look at the core CPI year over year, less effect, arguably so, but again, this administration is moving quite fast. But either way, nonetheless, previously was 3.3%. They were expecting 3.2%, but they got 3.1%. So consumer price index came in lower. Even if you look at the non-core numbers, they came in lower than expected, right? So lower than previous data points, plus lower than expected. So low inflation data all across the board. PPI inflation numbers, exact same thing in terms of the core coming in lower and coming in lower for the non-core as well. So given that information, the Fed potentially could arguably so decide to do out of nowhere cut rates. But then we have to wait and see what they say after cutting the rates in terms of what Jerome Powell states. Again, I will be live streaming that on my channel, so consider following and subscribing so you're notified when I do. And then we have the following week, so for Friday, March 28th, the PCE inflation data point. You could argue that they might want to wait until this comes out and then for the next decision meeting decide to cut rates, but we'll see. Now to go over the economic calendar. So for Monday, March 17th, we have U.S. retail sales. We have retail sales minus autos. We have Empire State Manufacturing Survey, business inventories, home builder confidence index. This is again for Monday, March 17th. Then for Tuesday, March 18th, we have housing starts, building permits, import price index minus fuel, industrial and production, capacity utilization. Then on the Wednesday, like I stated, the FOMC interest rate decision at 2 p.m. And at 2:30 p.m., we have Fed Chair Jerome Powell press conference. Sorry about that. It doesn't say Jerome Powell here. That's why. But then Thursday, March 20th, we have initial jobless claims, Philadelphia Fed manufacturing survey, existing home sales, and then U.S. leading economic indicators. And then on Friday, March 21st, we have nothing scheduled. And again, the week after, be on the lookout for on the Friday, March 28th, the PCE inflation numbers. The Fed regards these numbers as more accurate than the CPI and PPI inflation numbers, except sometimes it almost seems like they dismiss these numbers. It's kind of strange. But for the most part, they should be looking at these numbers because they're more accurate, or at least the Fed considers them as more accurate, and more predominantly on the core numbers. It has energy removed from it because energy is quite volatile. But there's been cases where they look at whatever numbers they see fit sometimes. But that's just my opinion. But that's basically it for today's video. Again, please do your own due diligence and research before buying and selling. Not a professional, just sharing my opinion. And if you found this video beneficial towards the end, consider dropping a like. It does help with the channel, so thank you so much for that. I do appreciate it. And again, if you use Free Tax USA, consider using the link down below. It does help out the channel, so thank you so much for that. I do appreciate it. No extra charge to you. It just does support the channel overall using the link. And that's basically it. Thanks again for watching. Appreciate it. Take care. God bless and peace.